Hi, good morning, everyone. Welcome to our this week's research morning call. Today we have a few stock counter updates, 17 Live, Oiltek International, and Geo Energy. We also have our usual technical analysis, and last but not least, we have sector report for software, air transport, as long as our SG Weekly. Without further ado, let me pass my time to Ambrish to talk about software.
Thank you, Helena, and good morning, everyone. So last week we had released an update report on the US software companies' earnings results. Next slide, please. Thank you. So we basically divided the major software companies into 4 categories based on their functions. And the overall sector revenue grew by about 14% year over year. And this was mainly led by Microsoft, which helped to offset weakness in Zoom and companies like ERP companies like Oracle and SAP. And in terms of its bottom line, the PATMI grew by about 32% year over year. And this was mainly because the companies, they focused on driving high operating leverage by cost-cutting initiatives such as job layoffs. And so moving on to the productivity segment, Microsoft and Adobe, they both met our expectations. So Microsoft's revenue, it gained by about 18% year over year. And it was mainly led by its cloud service Azure, which grew by about 28% year over year. And it contributed about 30 to 35% of the total revenue. Whereas the second segment that helped to contribute was the Office 365 segment, say productivity software. So Microsoft, it has a market share of about over 90% in the productivity segment. But despite this, the Office 365 revenues has been growing in about double digits by about 15 to 17% in the range of that. And this is mainly because of continuous product enhancements and the rising demand from front-end worker offerings. And despite its high capital expenditures that it has been investing into its data centers, so despite this, it expects its operating margins to be up by about 2% on a year-over-year basis. Whereas Adobe's revenue growth rate, it has been stable at around 11%, and this is mainly because of the ongoing demand for its photo editing and video editing tools like Photoshop, as well as its Acrobat PDF solutions. But however, in the March ended quarter, it expects its revenue to drop to about 9.5%. And this is mainly because management highlighted that mainly because of tough comparisons, as management said that the price increases which the company had done in 2021, it hit the a large base of customer base last year, and it started to roll off. Whereas for Zoom, the revenues has been consistently declining, and this is mainly because of the intense competition from Teams and also return to office initiatives. Whereas for the CRM segment, the two big players are Salesforce and HubSpot, and they basically provide solutions like enhanced customer service relationships and services like to boost sales operations and marketing operations. So basically, Salesforce targets large enterprises, whereas HubSpot focuses on the small and medium enterprises. So Salesforce revenue met our expectations, and revenue grew by about 11% year over year. And it also announced its first ever quarterly dividend of about 40 cents. Whereas the growth rates for HubSpot, they have been impressive. They have been growing by about 25% or so. And this is mainly because of its size. And it said that its number of customers last year, they grew by about 23% year over year. Next slide, please. So moving on to the ERP segment, the two players are Oracle and SAP, and both these companies, they have been facing like headwinds in its on-premise software license and support revenues, and this is mainly because the on-premise software licenses which have been installed, they have been installed on a local computer and servers, and they can only be accessed via that computer, and they can't be access it from over a cloud from anywhere. And as a result, the companies, they have been moving on to their SaaS offerings, which is Oracle Fusion Cloud. So it basically provides access from everywhere, and it's basically a ERP solution where it helps enterprises with the accounting or financing supply chain database. And the revenue, the SaaS revenue for Oracle, it grew by about 14% year over year. And it's similar for SAP, like the on-premise software license and support revenues also fell by 5%, whereas it's the ERP product, which is SAP S4 HANA. So its cloud revenue, it grew by about 55% to 1 billion euros. And in terms of cybersecurity segment, the two players that we considered are CloudStrike and Palo Alto Networks. And the revenue has been strong for these two products, these two companies. And this is mainly because the enterprises, they have been spending on cybersecurity solutions mainly to protect themselves from the external threats or hackings. So and for CrowdStrike, it mentioned that its existing customers have been spending more, as its net revenue retention rate, it was 119%. Whereas for Palo Alto Network, it expects a decline in the March ended quarter, and management highlighted that it's mainly because of the weakness in the government related contracts. So overall for March ended quarter, the revenue, it's expected to grow by about 12%, which is a sequential drop of about 2%. And this is mainly because of tough comparisons and we continued weakness in Oracle and SAP. But in terms of the companies that we would like to consider, two companies which could be Salesforce and Microsoft. And this is mainly because Microsoft, it could benefit from the continued demand for its Azure as well as Office 365 platforms. And for Salesforce, it has been witnessing a strong demand for its Customer 360 platform, which basically integrates all the customer data under its one platform. And also it has been focusing on profitability, and it last year it had announced a price hike, first price hike in almost 7 years. So it announced a hike of about 10%. So we expect that it should hit its customer base towards the end of this year. And yeah, so and Salesforce, it has also been focusing on maximizing shareholder returns by increasing its buybacks, and it announced its first ever quarterly dividend. And that's all for me. I would now like to pass it on to Peggy. Thank you.
Thank you, Ambrish. Morning, everyone. I'll talk about Oiltek this morning. We had a non-rated report published this morning on Oiltek. The company provides design, engineering, maintenance, and turnkey solutions for the vegetable oil refineries and processing plants. They cover palm oil, soybean, and rapeseed as their main agricultural commodities. The key customers are the major listed plantation companies such as Wilmar, Sam Darby, Sarah Oil Palms, all the listed ones. The company recorded 51% net profit growth. This is on the back of a very strong order wins of about 322 million new orders that they secured in the year 2023, compared to 196 million in FY22. The company was listed in early 2022. It surprised us with it's still in rising net profit, despite the higher listing costs. Okay. In terms of revenue, the bulk of it is still driven by the edible and non-edible oil refineries. Under the renewable energy segment, these are mainly the biodiesel plants, and also they engage in product sales and trading. What they do for the refineries is to design for the palm oil plantation companies to design and the refineries for them. And in recent years, because of the push for these palm oil companies to also, plantation companies to also meet the waste discharge requirements, so that they don't dump their waste without processing them. So there's another revenue driver for them in terms of this processing of waste. But in recent years, it's become even more interesting for them because of the sustainable aviation fuel. One of the 7 ways to produce sustainable aviation fuels is by using these waste products. And so from being a cost, mainly a cost for the plantation companies, it's now become a revenue generating process. So you can imagine it's more motivation for them now to want to invest in these systems to process the waste. And therefore, we think that this will provide the next push for them. Currently the major drivers is also in the renewable energy segment is also the biodiesel mandates. A lot of push by the Indonesian government, and in Malaysia they also are pushing for a biodiesel mandate. So at the end of 2023, Oiltek has managed to secure a record order book of 382 million ringgit. This will complete in 18 to 24 months. The balance sheet has net cash of 132 million ringgit, and that is about 26.5 Singapore cents per share. This is above the current share price of 25 cents. The business model is asset-light. They have a very low capex needs. They outsource all the fabrication and installation works to the party. And therefore their fixed assets is only about 3 million ringgit in the balance sheet. So they generate very strong free cash flow of 13.7 cents per share. So the current share price right now at 25 cents is priced at 1.86 times price to free cash flow. Market cap is below net cash. Next slide, please. Okay, these are some pictures to show the details of the company. Edible and non-edible oil refineries still account for 78% of the total revenue split. And this segment of the revenue is still growing because of the need to process the waste. The waste is discharged from from these refineries. But renewable energy is the segment that's growing fastest. It's now account for 13% of revenue. It's likely to get the share of the pie is likely to grow due to the biodiesel mandate. In Indonesia is now is the largest and fastest growing market. Still, as can be seen from the orange portion of the chart on the right. Africa was a big segment for them. The share has gone down because in the last 2-3 years there's the currency issues. Even though Oiltek they contract customers in US dollar, they are also concerned that in Africa they might not be able to find enough US dollar to be paid to Oiltek. Therefore, they have scaled down their operations in Africa. But still, Africa is an area where oil palm plantation has been growing fastest. Next slide, please. So a little bit elaboration on the biodiesel mandate. So in Indonesia, it's a mandate to blend diesel, the palm oil, the biodiesel with the traditional diesel for use for transportation, and in other types of like in the agriculture where the tractors also need to use some blending formula. So 2018, the Indonesia rolled this out B20 program worldwide, which means 20% biodiesel, 80% the conventional diesel. So 2022 January, they up the level to B30. Last year August it was raised to 35, and now they are working towards B40. So the final objective is to hit B100. So that's the reason why the blue portion of the chart has been growing so fast. It's because of the push for the biodiesel. The production of biodiesel in Indonesia now is reaching about 13 million tons. In Malaysia, they also have a B20 program for the transport sector. And under the 12 Malaysian plan, they mandated a B30 by the year 2025. However, it's not implemented nationwide right now because of the limited blending facilities. So there's talk among the different states that they want to build their own refineries to produce their own biodiesel in their own respective states, so that they don't have to rely on other states for for supply of biodiesel. So if that really take place, then there's a lot of refineries to be built. Next slide, please. Okay, this is some thoughts on the sustainable aviation fuel, which is we think is going to be next growth drivers for Oiltek. Now, if you look at draw your attention to the pie chart on the right, this IATA, International Air Transport Authority Association, has mandated a net zero CO2 emissions by 2050. So the strategy to move towards that is to have to convert to have 65% of these targets achieved through use of sustainable aviation fuel. Then the other segments are like through new technologies or offsets or carbon capture. Okay, out of the currently there are 7 technology pathways to produce SAF, short for sustainable aviation fuel. There are 7 technologies right now. If you look through the technology, the second one, the HEFASPK, this is through the use of vegetable oil and waste oil, the feedstock. So this is the segment that the palm oil producers, the soybean or rapeseed, the producers can potentially participate. And currently, among all these 7 strategies, this is also the lowest cost strategy. So therefore, we think from the second widely used strategy, one day it would potentially replace to become the top strategy for the production of sustainable aviation fuel. Okay, why this is important is that Oiltek has a technology. The producers of these sustainable aviation fuels are mainly the European biotechnology players like the Neste, all these big players, and they need the feedstock for production of SAF. But the current constraint that they have is there's not enough feedstock. But the major issue is that this feedstock are of unstable quality, so they cannot just buy the waste and then throw it into the refinery and hope to produce SAF. They need something more stable, a constant feedstock that they can use. So Oiltek has this technology for these processing systems to take the waste oil. We call it for palm oil plantation, we call it palm oil new effluent. Okay, these are the waste from the palm oil plantation. They have this technology to process the pomade into a stable feedstock, which can be sold to the HVO, that means the HEFA producers, to convert into SAF. So their technology is already certified and to be suitable. And they have already delivered the first plant to a Malaysian oil plantation company. Next slide, please. So we think there's SAF, the increased demand for SAF will probably will benefit them in the form of a bigger demand for the feedstock, and Oiltek has that technology to process and produce that feedstock. The margins for Oiltek in the last 2 years have been for FY22 has fallen, mainly because they now take on turnkey projects. So the equipment and materials value is also reflected in their revenue and in their costs, compared to in the past when these are not captured in his P&L. So why they do this? Why they want to take turnkey projects is because they will outsource the fabrication installation to 6 to 7 fabricators in Malaysia, and they outsource parts of the design, so that will help them to keep the know-how in-house and not be shared externally. And so that is that strategy. And they also think that this way they are able to control the cost of production for their customers, because the customers who are or the plants are going to be installed in Indonesia or Africa, it will use them to contract the fabricators in Malaysia. Then and for them, because of the model that they employ, they have very little capex needs. So cash flows, operating cash flows basically just flow all the way down so free cash flow is almost equivalent to cash flow from operations. So they generated 68 million ringgit from free cash flow alone. Next slide, please. So they have a very strong ROE of 28%. That's despite the net cash that they have in the balance sheet of 132 million ringgit. So so we think this is it looks attractive for a company like this size. Thank you. That's all for me for Oiltek. I move on to the next company. Geo Energy. They had an analyst briefing which I attended, so I share some of the points that we discussed. Okay, market cap of 478 million Sing dollar. They have 4 concessions in Kalimantan, and then last year October they acquired a stake in Indonesian listed coal miners. So now they also own 1 concession in South Sumatra, and total 2P proven and probable reserves is about 351 million tons. The management thinks that they will profit will be flat for 24 and 25. In FY23, if I refer you to the table on the right, they have a net non-cash gain of 22 million. That's from gain from bargain purchase. It's an accounting entry. So it helps to improve that balance sheet, but it doesn't have anything to the cash flow. And last year, their volume production produced was down to 8.4 million tons. But FY 2024, they had already secure a quota to do 10.4 million tons. So that's a higher number even compared to FY 22. And now that with coal prices staying above and on an average of about last year's level of 58 to 63 US dollar per ton. So they think that they would be able to maintain the net profit about 60 million this year. In October last year, they acquired 73% stake in this PT Gen. They paid 182 million. So PT Gen adds 275 million tons of 2P reserves. Yeah, to the reserves. So it's significant for them. Otherwise, with what they have right now, the reserve is actually, the 2P reserves actually depleting. So they funded this through a bank loan from Bank Mandiri at 8% floating interest rate. Then beginning this year, they announced that they signed offtake agreement with EP Resources to take up to 12 million tons a year from this mine that they just purchased. And the mining permit will last till May 2030, but extendable for another 20 years. There's also another issue about the issuing treasury shares and free warrants I'll discuss in the next slide. So going forward, there's 2 things to know. One is they expect profits to be flat. So there's no growth from here in terms of PE or EV/EBITDA. They will incur $100 million US to build a new road in Sumatra for this PT Gen. That will be completed by December 2025. They won't pay this amount yet. The contractor will pay for it, and then but when the road is handed over, then they will pay the power of it. So that will happen in late 2025. The new road will allow them to raise their output from the mine to 25 million tons a year in 6 years' time. 6 years from now, it means 2030. Okay, the gearing has already risen to 21.6%. They have a net debt of $90 million US at the end of 2023. Thank you. Next slide, please. Okay, this is a table to show the share issue and warrants issue. Okay, they have gotten shareholders approval to issue treasury shares to this company called Resources Invest. Resources Invest had said that they intend to invest up to $35 million by March 2026, and this exclude the exercise of the warrants. Okay, so they had done the first tranche. They issued 14.9 million treasury shares to Resources Invest at 45 cents. So they got in a cash inflow of 6.7 million Sing dollars. The second tranche will be completed by February next year. Another $6.7 million if it happened. So the total stake that from the treasury shares they given up to these new investors will be about 2%. And this stake, these shares have a moratorium till December 26. And this Rest Invest says that they intend to retain a 5.5% stake in the company for the duration of the offtake. Okay, then what surprised us was that even before the placement of the first tranche, Rest Invest actually owns 67.1 million shares in Geo Energy. It's already owned that. So after the first tranche, they became a 5.83% shareholder. If the second tranche take place, that will be another 1%, so they will become a 6.82% shareholder. And Rest Invest has been given free warrants. They can exercise these warrants within 3 years. And the exercise price is 55 cents for the first tranche and $1 for the second tranche. And then total number of shares after the whole entire exercise will be 1.46 billion shares. And Rest Invest will own about 9.37% stake in the company. So for the time being, what benefits Geo Energy is 6.7 million Sing dollars that came back to the company's balance sheet. But all the rest are just might not happen. So I think the market probably it doesn't bear much weight in terms of the share price performance. And so for that we feel that it's not something to be very excited about, except that you now have a major shareholder that owns 5.8% stake in the company. Yeah. Thank you. Yeah, I think that's all. Next one. Yeah, sorry. Air transport sector. We did a report last Monday, so this is some recap. The valuation continued to fall in the month of March for all three aviation counters listed on the Singapore markets. We can see some funds flow going into the Hong Kong and China listed peers like Cathay Pacific and BOC Aviation. They have done very well after the FY23 results, which the turnaround. Okay, the few highlights for the month of March is that we noticed that jet fuel prices are actually climbing. It's now up 12.4% year to date for the first 3 months of this year, and this driven by higher demand as air travel recover. The second thing is that the renewed sanction on Russia. Russia sells a lot of diesel to Europe. So when they sanction Russia, Europe sees less diesel. And so some of the complex refineries were able to switch between diesel and jet fuel because these are comparable middle distillates in the petrochemical structure. So they switch from jet fuel to diesel. And with that means less jet fuel supply, and therefore push up the jet fuel price. So okay. The second development is that Air India and Vistara, the merger has gotten approval from Singapore Anti-Competition Authority. We still need some further regulatory and foreign direct investment clearances. So if this go through, the merger goes through, SIA will own 25% share of the combined entity in exchange for the 49% stake in Vistara and an injection of 360 million Sing dollar. And SIA, on top of this 360 million Sing dollar, has also committed to inject a further 880 million into the combined entity. So with the 360 million cash injected in, SIA will be able to book a non-cash accounting gain of 1.1 billion. It's just an accounting a way of accounting for their stake. So that's about 40 cents per share. This number has not been included in our March 25 book value estimate of $5.91. Okay. Then the third point is that SI Engineering announced that they will exceed the risk revenue sharing program from the Pratt & Whitney PW15 1005G engine program, and they write off 25.1 million from this as participation. Why the participation is significant is because if you are participated in this program, then whatever new technologies that Pratt & Whitney has developed for these two engine types, they will share with all the partners, and then everyone has a share can share in the either through an MRO, providing MRO services, or some parts for the engines, etc. So if you are no longer in the program, you might be cut off from future engine developments or engine MRO work for these new types of engine class. So potentially the long haul, the longer term impact is much more significant. So for Pratt & Whitney, they have 3 engine service bases worldwide. Two are wholly owned by them, and then one they have jointly with SIA Engineering is Eagle Asia Services based out in Singapore. So now that SIA Engine part of this program, so it will also impact Eagle's ability to do more work on future generations of PW engines. Thank you. The next slide, please. So for the Singapore Airlines load factors, you can tell the red line is dipping down. Even though they also cut capacity, the load factors are down for the 3rd month. Main route that's seen a very consistent decline is European routes. It's now 10th consecutive month of year-on-year decline in load factors. In terms of cargo recovery, is also sluggish, especially deep downwards again. After January's numbers, was a small spike because of the pre-Chinese New Year cargo demand, as well as the Red Sea conflict. But since then, we've seen the traffic as on the Red Sea has actually more or less returned to normal. Thank you. Next slide, please. Okay, so in the Changi Airport alone, even the traffic, we see softer passenger volume on January and February. But March there might be a bit of improvement because of some one-off events like the concerts. But also on the air freight volume side, there's also on the decline. Next slide, please. So just show you some Cathay Pacific numbers to illustrate how competition has been catching up. So Cathay Pacific is now at 62% capacity of pre-pandemic level. It's still gaining traffic as well, even as they increase their capacity. The key concern here is that jet fuel prices are on the way up. Jet fuel is one of the major cost item after staff costs. Thank you. I think that's all for me from today. I pass on to Miao Miao for 17 Live.
And thank you, Peggy. Yeah, so we initiated on 17 Live. It's a live streaming platform which listed last year, December, following the acquisition by Oiltek SPAC with a market cap of 183 million. The company generates revenue through sales of virtual gifts, virtual live streaming, live commerce, and picture on the live is the interface of the app in Japan side. So there's small animation related content. And on the right is the screenshot of the Southeast Asia app version. Next slide, please. So monetization process take place when viewers purchase virtual gift for streamers during the live streaming. Streamers can return the virtual gift back to the platform for the salary. And currently, 17 Live has the highest paying ratio among the industry of 16%. Yeah, so here's the picture of the streaming room. The streamer will come up with all of the creative contents. So I screenshotted this morning. The streamer was saying, and in between she will stop and greeting the audience. And users can interact with the streamers by sending text or GIFs. So the photo in the middle is the gifting function. Users need to top up the virtual coins. Yeah, and then send it to the streamers. And on the very right is the V-level streaming. Instead of the real person, they'll use the animated figure, and it's very popular in Japan now. Next slide, please. So from FY23 onwards, 17 Live plans to shift its focus towards higher margin revenue, such as live commerce and in-app game. If commerce adopt the C2C software as a service model, where 17 Live charges a subscription fee and a percentage of gross merchandise value, streamers can use the technology and facilities provided by 17 Live to stream on any other platforms like Facebook or Instagram. Yeah, so here's a screenshot of the website. They have different packages. Some of them is fixed rate and some of them is variable rate. From FY24 onwards, 17 Live will have a cut from something like shipping, warehouse delivery. So actually all the packages has a variable component packed to the GMV. Yeah, so they'll increase their profitability. And they also have the in-app game, is the picture in the left corner. Yeah, customers can purchase the in-app game virtual items to help the streamers to progress in the game. Yeah, so margin for this segment is the highest among all, so it's up to 100%. Next slide, please. So we identify 3 investment merits. Firstly is organic growth. We anticipate growth driver in FY24 to come from its live commerce, V-level revenue, and expansion in Southeast Asia and US. Live commerce revenue is projected to grow 40% in FY24, building on the success of gross merchandise value growth in Taiwan, which increased 80% year-on-year in FY23. Supporting GMV is the increased cross-border demand in Japan. Is increased cross-border demand for Japanese products. So Taiwan streamers will purchase the product in Japan and sell it to Taiwan users. So we also expect a surge in V-level revenue contribution. V-level, yeah, as mentioned just now, is the virtual skin streamers is able to use instead of the real face. You can design your own animation figure. Yeah, so is the graph on the left-hand side. Yeah, so growth will come from the increased popularity and awareness of V-level, and the jump in content supported by the automated virtual skin creation process. One skin used to be $1,000 to $2,000 and takes weeks to generate. Now it's free and almost instant. Meanwhile, the core live streaming business MAU, monthly active user, is to return to the growth phase of 10% from improving user retention. So platform will push more contents and new streamers to the user and incentivize them to stay in the platform. On the right-hand side, there's an activity pushed by 17 Live. It's a 7-day activities. So once you sign in on the app for 7 consecutive days, you'll have gifts from the app every single day. Yeah, furthermore, they also have streamer training for better contents and experience, and also they'll launch new marketing initiatives to attract more users. And next slide, please. Next is organic growth potential. Acquisition of streamers in the US, Japan, and Southeast Asia is the strategy to onboard more MAU. Each additional streamers can bring about 20 more MAU. Leveraging on the enlarged user base and high paying ratio of 17 Live platform, we believe the acquisition is accretive, and we expect MAU to increase by 10% in FY24. So last but not least is cost optimization. 17 Life has increased the focus on higher margin revenue. Therefore, the gross margin actually improved from 35% in FY22 to 41% in FY23. Despite the improvement, margins were still disrupted by the FX issue. As yen depreciated last year, users in Taiwan purchased the virtual coins in Japanese system and then gave it to the Taiwan streamers. Therefore, margins in Taiwan was disrupted. But this year, they implemented some new policies like restricting cross-border purchasing of virtual coins. So we expect a 10% increase in gross margin for Taiwan this year. 17 Life is also cutting down R&D costs, about 15 million, without compromising users' experience to offset the higher marketing expense in FY24. Yeah, next slide, please. Oh, so sorry, back to the previous slide. Yeah, so the graph on the right is the revenue projection. Revenue only accounted for the organic growth. We expect catalysts to come from inorganic growth side. Yeah, and they'll be back to the growth mode starting from FY24. And margins, as mentioned just now, will face some disruption in FY24, but we expect it to pick up in 25 onwards. Yeah, thank you. Next slide, please. Yeah, so since not everyone is familiar with the streaming business, we interviewed the management about the typical paying user profile and popular contents. As they conducted monthly meeting with the top spenders. Typical users in Japan is the elderly individual who lives alone. A small elderly lives independently. Streaming platform provides a form of social support and interaction. Yeah, making the user more inclined to pay for the service. And also in Japan, they have a culture of providing monetary support for their idols. Yeah, the behavior becomes more pronounced when there's a shared and common goal. As a result, revenue from both online and offline events actually accounted for 80% of the total income. Yeah, the events are mostly conducted in the PK method, like the player streamers versus streamers. So the top streamers who receive the most virtual gifts will win the prize. For Taiwan customer who give during the streaming typically seek social interaction through greeting, recognition, interaction with the streamers. The more user gift, the better benefits they will receive, such as when you enter into the streaming room, there will be like visually stunning effects. And when you text in the chat box, the frame will also be different. So the differentiation motivates lower ranking users to spend more to achieve higher status, and high status users to spend more to maintain their current status. Yeah, so the picture on the right shows the market size of streaming in Southeast Asia is expanding, and leverage on the IPO last year. 17 Life may benefit from the market expansion. Yeah, next slide, please. Yeah, there are some risks we would like to highlight. Firstly is concentration risk. Roughly 20% of the top performing streamers are responsible for more than 80% of the revenue generated. Despite their exclusive agreement with 17 Life, these streamers might consider migrate to other platforms when there's like more attractive revenue sharing package. And next one is income risk. Post-pandemic, individuals are slowly resuming back to physical activities and reducing their consumption of digital content. This include video streaming. Yeah. And the last but not least is dilution risk. With 17 Life aiming for a series of acquisitions this year, we anticipate revenue and share outstanding to be diluted by employee incentives, particularly share-based compensation. Around like $20 million US might be allocated for the program. And given the current share price of 1.03, we expect the total share outstanding to increase by around 25 million. Which increased by 14%. Ultimately, it will dilute the share price. Yeah, next slide, please. As such, we initiated our coverage on 17 Life with a buy recommendation and target price of $2.3. Our valuation is based on DCF using 14.1% WACC, as the group is purely funded by equity and 1% terminal value. 17 Life is further monetizing its core user base and streamlining operating expense. After declining for 3 years, we expect revenue to stabilize this year and return to full year growth in FY25. The major driver will be new contents, live streaming, live commerce sales, and subscription, further cost reduction and inorganic growth. Yeah, that's all for me. I will hand over to Zane for technical parts. Thank you.
Thanks, Manuel. Good morning, everyone. I'll move on to the technicals. First up, let's take a look at the S&P 500. Last week we saw the index actually broke down the uptrend channel in blue inside this chart. So for this week wise, we are likely to see a further pullback happening. So for the immediate resistance currently is likely to be at 5,220 to about 5,265 area. For the immediate support could be at 5,030 to about 5,100 area. Next slide, please. Yeah, so for individual counters, the first one is Genting Singapore, a technical buy at 90.5 cents, take profit levels at 96 cents and 99 cents, stop loss at 88 cents. The stop loss closed at 89.5 cents on Friday. So looking at chart for Genting, looks to be breaking out of this descending wedge pattern. And then following a false breakdown below 88 cents previously. And this was accompanied with both bullish divergence as well as increasing momentum on MECD as well as RSI. So we believe the stock could turn up in the near term towards and do a rebound towards these two take profit levels. Next slide, please. So next one is on CapitaLand Ascendas REIT, also a technical buy at 278. Take profit levels at 291 as well as 297 with a stop loss at 270. The stop loss goes at 276 on Friday. So looking at chart for CapitaLand Ascendas REIT, you also broke out of I think there's a issue with there's a slides. Maybe we can flash the slides.
It's okay, Zane. Actually, I can see the slide. You're on CapitaLand Escort REIT, right?
Yeah.
Yeah. I think you can see some. Maybe the attendee has some issues. Sorry for that.
Okay. I'll carry on. Thanks. So looking at the chart for CapitaLand Ascendas REIT, there was a breakout of this descending bottom wedge. And then the price actually formed a higher high above the 277 previous swing high, which indicates a reversal in terms of momentum. And then this was following a double bottom form at 265 as well. And then last but not least, we also saw bullish divergence as well as increasing momentum on the MACD. So we believe the stock could actually do a bullish reversal to actually trend higher towards these two levels. Next slide. Next one is a technical sell for Home Depot at $363. We'll take profit levels at 345 as well as $335. The stop loss at $376. The stop loss goes at $357 and $357.87. So looking at a chart for Home Depot, there are some bearish signals present. First one is that it has broke down below in an uptrend channel in blue. This was following a false breakout previously above the $383 level, which actually hit the channel resistance. And then price has actually came down sharply afterwards. And then when we see the momentum indicators, there's also bearish divergence and decreasing momentum as well. So we believe the price will actually continue its pullback towards these two levels with prior supports. Next slide. The next one is a technical sell for Mastercard at $477.20. Take profit levels at $462 and $450. With a stop loss at $485. The stop loss goes at $477.15. So looking at the chart for Mastercard is quite similar to Home Depot as well. There was a breakdown of the uptrend channel following a false breakout above $479, coupled with decreasing momentum and bearish divergence or MACD RSI. So you could see a pullback in the price in the near term towards these two levels. Next slide. So this is just a summary of the trades I mentioned just now. For Genting, it's currently down about 1.1%. CapitaLand Ascendas REIT down about 0.7%. Home Depot is about 1.4%, while for Mastercard is about trading flat right now. So that's all from me. I'll pass on the time to Paul to talk about Singapore Weekly. Thank you.
Yeah, thanks, Zane. Oh, sorry. So I'll just go through the usual macro weekly for Singapore. Next slide. Some of the data points we got from last week on Singapore is basically positive. I think manufacturing is beginning to see some pickup. What we look at is PMI new orders. So it's basically a survey by purchasing managers on are they seeing more new orders coming in. So the survey at least is the highest in almost 3 years. Retail sales is also surprisingly also bouncing back up. It's up 3%. It's a pickup from the 1% in fourth quarter. Not sure why, but watches is the one that's selling the best right now. Apart from eating other places, which I think is like hawker stores, if I'm not mistaken. A supermarket also did very well, so this should be positive for Sheng Siong. There's quite a big bounce from the decline in the fourth quarter of 2.7. Construction is down, but it's actually quite volatile, so we have to monitor that. In the US, I think all over the headlines, we'll discuss more about it, is the big payroll numbers. It's basically the highest in 10 months and beat expectations. And surprisingly, even though payrolls is doing really well, but wages is actually still declining. So it's actually down from the lowest in 33 months. So it's almost like the best case scenario. You have a lot of job growth, but not much wages pushing up inflation. And it's partly due to higher immigration and, oh, sorry, that's a typo. Yeah. Auto sales is also doing well in the US, up 4%, and bank loans still contracting. Next slide. Okay, I'll give our technical view. So every week, every Monday of the week, we will come up with some of our weekly views and just some general thoughts on the market. It's either in our morning mode or it's in our P3 commentary. But anyway, the discussion that we did for this week is basically the strong jobs growth. If you look at the numbers, 50% of the new payrolls, the 300,000, half of it actually all came from government and healthcare, social. So all related to government spending. So this government-related jobs now of about 150,000 is actually 3 times more than the pre-pandemic. So whatever job growth you see now is all coming from the government. And the fiscal deficit expected this year is going to be 5.6 or 1.6 trillion. So one way to interpret this is that there's probably no, you don't expect any slowdown in the US growth because there seems to be no restraint. So what we're trying to say is that there's no restraint to government spending because their deficit is, I don't know, 5-6%. They have like 30 plus trillion of debt, but they can still issue a lot of debt. They can fund this expansion, and the US dollar is still strong. So they can have this twin deficit, which is government deficit and balance of payments deficit, which means that their exports, they import more than export in very basic terms. Ad infinitum, that means they can keep on doing this until the market loses confidence, but I mean, there doesn't seem to. So what does it actually mean? So what it means is that the downside is going to be limited for the US growth. So any recession thoughts or anything is going to be very low because the government's going to continue to keep on spending, and the deficit is going to continue to rise for the next few years. A separate thing was about interest rates again. So Fed speak, what I mean is that a lot of Fed officials, you probably see it all over the news, all giving their comments on where interest rates are. Most of them are now cautious. So the comments now are coming, some say one cut, some say no cut, some say even rate hikes is possible. So all these are pushing down interest rate expectations, and making it worse is that the gasoline prices in the US is up 6% in March, year on year. So technically, I think for us, it's one way to hedge out against higher for longer interest rates or any unexpected jump in inflation is banks, of course, at least from the Singapore context. And so because they provide high yield and also they benefit from the higher interest rate environment. In terms of the events, the bullet point at the bottom, the big one will be the US CPI. So that comes out on Wednesday, the one that everyone is watching. And on Friday, there will be all the US bank results, which we already initiate coverage on, which is done by Glenn, who's on leave this week. For some of the corporate insight webinars we have this peculiar one. It's actually a new IPO. It's going to only list, I think, on the 23rd and do filing on the 12th. So they just come and do a briefing. Yeah. And of course, we have our usual US strategy and night, and also SG Singapore strategy. The others, like ISO team, is all these are open for anyone who's have time to listen in. Next slide. So again, we just do a picture, just do some illustration for what for all the data, just to get a better sense. So you can see the manufacturing surprisingly is picking up in Singapore. Retail sales has got a nice bump here. The red line here is for supermarkets. Again, this is just for illustration. Next slide. The next is US jobs. So why we say that the red line is where the cyclical. So these are your usual jobs, your banking, finance, banking, IT, restaurants, and everything else. So this is still coming down. But what is holding up is actually just government jobs, which is the one that's holding up all the growth. We should still expect jobs to continue to be strong. So this will put pressure on the Fed not to cut rates. Because if you look at this line here, the red line, so what we just taken is up to the pre-pandemic 2019, then you just extrapolate. That means this is the usual trend of adding 2.28 million jobs in the US. So you just trend line the pre-pandemic and you look at what is happening right now in blue. So it just shows that the jobs is just trying to catch up to the trend line because they lost so many jobs during the pandemic, and then a lot of it was replenishment. Yeah. Okay, next slide. Then this is just to show the deficit. So the deficit is in red. So if you notice the 2024, so this is a projection by the CBO, which is a non-partisan. It's the body that everyone uses because they have the best estimates of what will be the government spending. So US government is still going to spend about 1.6 trillion in 2024. Compared to if you look at the global financial crisis is 1.5. Of course, the GDP has also increased, but you can see the amount of deficit. That means the amount, one way to think of it is the amount of money the government is throwing into the economy. That means how much tax they collect versus how much they are spending. So if they are spending 5.6%, so what it means is that even if everything else stay the same, government alone can push the economy 5 percentage points. Again, what it all means that this thing can continue because the market isn't too bothered about it. You don't see the US dollar weaken. And you can see since the crisis, the amount of spending that the government has done. This one is a more peculiar slide. So this is basically the net issuance of debt. That means the amount of debt that the public has to hold. So can be sovereign debt, can be the private sector. So 2024, they need another 2 trillion of new debt that's going to be issued. Last year was 2.4. So this is also another thing that might keep interest rates elevated because the US government is just issuing a lot of debt. So this is not the total debt in the US, about 37 plus trillion for the government. But this is the amount of net debt that needs to be held by the public, excluding the government. What this also means that you're probably going to squeeze the private sector. So it means that the private sector also wants capital, needs to borrow. But if the government is borrowing everything, then it might squeeze the private sector, meaning raising rates again. Next slide. I think this should be it. Yeah. Okay. Yeah. Thanks, everyone. I think we can move on to Q&A.
Thank you, Paul. So there are a couple of questions for me. So the first one, under software, what is your views on DocuSign, please? So DocuSign, it basically helps with the digitally verify the documents, and it has been under the robust demand during the pandemic times as the organizations and employees, they were remotely working. But since then, post-pandemic, the growth rates have been falling for DocuSign, and in the most recent quarter, it grew by about 8% year over year. Whereas in terms of its bottom line, I think it just became profitable by reporting about 27 million of net profit. And compared to this, it faces direct competition from Adobe's Acrobat PDF solution, and whereas Acrobat PDF, it's more of a broad-based solution wherein it's integrated with it's basically also the default PDF viewer on Edge, which has billions of users. So yeah, so we don't cover this stock right now, so can't comment on that. And there was another question with respect to how to choose the one between CrowdStrike and Palo Alto, Oracle and SAP, which will you go for? And who are their main competitors in the respective segment of cybersecurity and ERP? So CloudStrike, it basically offers endpoint solutions from threats. Like it basically protects laptops or mobile devices from threats and provides remedies for them. Whereas Palo Alto, it's more of a broad-based solution provider, wherein it also provides network security services, wherein it helps to prevent it does it helps to stop it prevents threats to spread on your network, and it helps to prevent also the data. So in terms of outlook, the Palo Alto, it expects a more a cautious outlook. Its management said that it's expecting a cautious outlook for the upcoming quarter, mainly because of their government contracts. They have been delayed, and also they are facing some macro uncertainties. Whereas CrowdStrike, it's growing rapidly at about over 30% range, and it has not guided for any significant deceleration in the upcoming quarter. And its main competitors could be like Fortinet, as well as Cisco and Cloudflare. Whereas in terms of ERP, I believe that SAP, it has more industries, it covers more industries as compared to Oracle, and it's more user friendly. Whereas also in terms of its revenues, like its core product, which is SAP as H4 HANA, the revenues has been growing by about over 50% for that, as compared to the Oracle's flagship product, which is Oracle Fusion Cloud. The revenues have been growing by about less than about a 50% range for that. And in terms of competitors for Oracle and SAP, it could be like IBM or Salesforce. So and also Workday. So that's all for me. I would now like to pass it on to the rest of my team. Thank you.
Yeah, let me take some of the questions. Yeah, does Paper 3 log or Freezers log do better in financial figures? Yeah, so the latest financials for these two were actually 2 quarters back, because the most recent one was just a quarterly update. So yeah, it's not really relevant to go through those financials. We have to wait later this month for the full year results, or the half results to come out before we do a proper analysis again. But just comment on the portfolio. The Maple3 Logistics portfolio has about 20% in China, where China's, as you all know, the logistics performance there and the demand for logistics at properties not doing too good. So they are prioritizing occupancy over rental reversions there. So as a result, we see some negative reversions there. Yeah, so Freezers log is the portfolio is in Australia, heavy in Australia industrials, and there's some in Singapore and UK as well. Yeah, so that's my comment. Yeah. Do you prefer FCT, Freezers Centrepoint Trust, or Freezers Logistics Commercial Trust? Yeah, so you can't really compare, because there are two completely different subsectors. One is logistics and commercial office. The other one is just pure suburban malls. But based on our subsector preferences, we favor the FCT because of the resilient suburban malls. We still think rental reversions in the mid-single digits is possible this year, especially with so many payouts like the CDC vouchers and the return of Chinese travelers, the population growth. All these will help to improve tenant sales. And as a result, the likelihood of rental reversions will also be there. Yeah, one more thing is that FLCT, they have about 25% of their debt that's due for renewal this year, or rather due for refinancing. Yeah, I think just one more for me. With the possibility of delay in US interest rate cuts this year, what's the outcome of S REITs? Yeah, so of course, with the delay of interest rates, the cuts, the S-REIT outlook is not as bright because the high interest rates basically affect REITs in this way. So one of it is, of course, higher finance costs. Another is higher cap rate expansion, which results in higher valuation. Or sorry, cap rate expansion results in lower valuation. And also the high interest rates will mean that the dividend yield spread also likely be lower because of the higher yields. And the last reason is because high interest rates will definitely affect the transactions market. Like you can't get a good positive carry. Like you borrow money, let's say borrow at 5%, then the yield you get on these assets might be even lower than 5%, for instance. So this is just an example. So these are reasons why the high interest rates will affect the REITs. But so a delay in the rate cuts will definitely affect the sentiment in S-REITs going forward. But any specific REIT sector or counter that is still good to buy or accumulate, we still favor the hospitality subsector because we think the improvement in RevPAR and the improvement in the operational performance as well as a recovery in travel is no doubt it will slow down from the 2023 growth levels, because 2023 it really grew by the double-digit 21%. So we still favor that because we think that potential for DPU growth in the hospitality subsector is still very strong. Yeah. So in that specific subsector, we have two calls, FEHT and CapitaLand Escort Trust. Yeah, what is your take on CLCT? Yeah, so CLCT, the logistic parts is still weak, and we are probably expecting recovery in next year or maybe later half of this year. Yeah, we have to wait for their results to get more details on CLCT. Yeah, but generally the whole macro for logistic parts in China is very weak, especially before the e-commerce players. They overexpanded during the COVID period rather, and now a lot of these are consolidating and giving up space. So that's one of the reasons why the logistics parts are doing so weak in China. Yeah, I think I'll pass on to my colleagues. Thanks.
Thank you, Darren. I'll take the 17 live question, or 17 live question. Hi, 17 live revenue peaked in FY21 and dropped it all the way afterwards. What created the drop? Yeah, the drop is mainly because, like, as I mentioned before, post-COVID, individuals slowly resuming back to physical activities. So they just spend less on the digital content. So during COVID period, paying ratio was very high, up to 17%, and was almost the highest among all the peers. Yeah, and also ARPPU average rate per paying user was up to $366. Yeah, it's also the highest in the industry. Yeah, so because like during that period, people just don't have other activities, so they're just spend on streaming. Afterwards, revenue peaked because post-pandemic, streaming just not as appealing as before, since like they come back to the physical activities. Yeah. Also, despite the paying rate still increased, ARPPU dropped it around like 20%. Yeah, and the active monthly user MAU it just cut into half. So for 17 Live, yeah, that's it. Hope it answers your question. And for 17 Live, there's a huge drop from 4.3 to current price 1.2. Was there any fundamental reason that causes the huge drop in share price initially that we should take note of? So fundamentally, we think the market initially just wasn't familiar with the company, and it's a Taiwan company, and the main market was in Japan. And if you look at the company, right, it seems to be loss making because the adjusted EBITDA and adjusted net income is actually positive. Yeah, and were in the upward trajectory because they had a lot of like share-based compensation, revaluation loss, those like non-cash item, yeah, which were hurting the bottom line. And some investors were doubted that the sustainability of the revenue model, but we feel like the model was quite successful looking at all the operating metrics. They have the highest paying ratio, 16%, and was very sustainable even after COVID. And it has the highest ARPPU. And FY24 onwards, they're still working on providing a more user-friendly function, like trainings for the streamers and new marketing initiatives to keep attracting users and improve their MAU. So we don't think there's any fundamental risk which is not addressable. Yeah, but something we should take note of is like I mentioned just now, they have a lot of like share-based compensation for FY24, around 20 million, which could, although it's non-cash item, but it's still because of the enlarged share base, it may dilute the return. Yeah. Yeah, hope it answers your question. Positive. Very positive. By 17 Life, very positive forecast for growth in Thailand market. How is it delivered? Any competitors? I think you mentioned, you mean the slides we showed the market share just now, right? It is the total addressable market share of the live streaming industry as a whole. Yeah, they currently is focusing in Singapore. Yeah, I don't think there's there will be a major change in Thailand in terms of their market share for 17 Life. Yeah, hope it answers your question. I'll hand over to the rest of my colleagues. Thank you.
Oh. Can someone okay, let me just try and clear. There's still some 17 left, or whatever you answered, just tick it off. Okay. Okay, let me just answer some, then we can move to Zain. Isn't the retail sales and supermarket sales increased due to CNY effect? Yeah, I think if you measure quarter on quarter, it is, but for us, we do year on year. So we compare February of this year versus February of last year, and we actually combine the 2 months, so year to date. So at least you get the January and February effect, so depending where Chinese New Year runs. So that's how we get it to kind of normalize the thing, to remove all the seasonality. That's why we use year on year, which is last year versus this year. Hi Glenn, any advice on whether to hold DBS for bonus shares or to sell on the high? Also, how can we deal with the odd lots if we hold the bonus shares? Yeah, Glenn is not around. So for the odd lots, I thought not particularly sure. This I need to check. This is something I need to check how to address the odd lots situation. Yeah. I'm not particularly clear myself, but okay. But in terms of the DBS, I think we still like it. I think they are maintaining dividends even though bonus shares. So the yield, if I'm not mistaken, is still going to be 6.5 or 6.8, if I'm not too wrong. And they already committed paying this, unlike the other banks. And they also, with interest rates climbing up, staying higher, then I think there's probably more confidence that at least their earnings can sustain or if not grow for this year. So we still like the DBS, but sorry, I'm not so sure how to answer the odd lots on. Yeah, I don't have an answer. I don't have the right answer. Yeah. Any change in AEM outlook since their last week announcements? It's definitely I mean, it's without stating the obvious, it's positive, and I think the trend for SLT, that means system level test, is I think this trend is going to be underway. I mean, there's nothing going to stop it from the current old model. Just that I don't think I've got really much good answers. So just that the share price already come down from $5, and you're just waiting for the next uptick in semiconductor cycle. So that's why we kind of like it too, because the only disappointment is Intel, but Intel is still building up new foundry, new foundries because they are still looking to start a foundry business standalone. And secondly, what's happening globally is that there are many new startups coming up. So Europe is also spending on semiconductor capacity. China, of course, and US alone also. So the next 1-2 years, you're going to see a lot of semiconductor capacity going to be built up, and this will benefit all the makers. Of course, after that, then it's going to be a boom and bust, but at least there's going to be a boom now for the next few years. Because if every region build their own capacity, there's obviously going to be a excess capacity everywhere. But I think in the meantime, you're going to get this big spike. Yeah. So even though semiconductor equipment, I don't have the numbers here, but they hit record levels. But you notice, although it has corrected, but it hasn't really collapsed. So it's still trending at very high levels. Just that you don't have the kind of growth that you had before. So that's why I can only give you a macro view. We don't have anything else to add for following up on the contract, which they've already mentioned before. It's probably a high bandwidth. It's a high bandwidth memory. So yeah. Any idea when the preferential offering for KIT will? Yeah. So Peggy is not around. Sorry, Peggy follows KIT. So apologies. I don't have the answer for that. I'm going to paste it here, then try and post it on the P3 community. Yeah. Okay. Hi, is Hong Kong land or Mapletree a long-term sustainable buy for dividends? I think this one I'll hand it over to Darren if he has any particular views. So what do you think of Link REIT? Yeah, so we don't cover Hong Kong stocks here. Yeah, thanks. Your views on iFast? I didn't. Yeah, okay. I haven't gone through their most recent results, so I can't really give you a very strong view. But I mean, I still like it because there's earnings visibility with the Hong Kong contract, and in the background for iFast, they're still building this. I guess you can call it the Netflix equivalent for emerging markets. That means any emerging market customer can open an account with iFast. So that's the big game plan. It's like the Netflix equivalent for a high net worth business. That means anyone around the world can open a bank account because they have a bank account license. So I think for me, I still like it, and their unit trust platform here in Singapore, which is used by a lot of FAs, is the de facto standard. I mean, it's the de facto platform. I mean, every FA, I think, if you speak to them, uses them. So I just said I didn't go through the recent results. It was done by Glenn. Yeah, thanks. Yeah, so sorry, the answer is not very insightful anyway. Do you have any questions for the Hong Kong land, Darren? If not, we pause to Zane.
Yeah, I see Hong Kong land, they are paying a good dividend of 5 to 7%. I think that is relatively similar to MPAC. Yeah, so I'm not too familiar with Hong Kong land. I need to go deeper into the financials to know which is more stable. Yeah, but for now, what I see is just based on just dividends is relatively similar.
Yeah. Yeah. But following on what Darren said, but I guess if Hong Kong land can pay such high dividends, even when there's atrocious conditions for Hong Kong office, then and they're trading at, I think, 40-50% price to book, discount to book. But anyway, compared to MPAN. Okay, thanks. So yeah, some of these questions we hesitate to answer because we need time to go through the financials to give a proper answer. Though, so apologize if our hesitation to answer these questions. Hand it over to you, Zain. Yeah.
Okay, thanks, Paul. Okay, I'll move to the technicals. The first one is on SoFi. Okay, so looking at chart for SoFi, currently, I would say most likely is doing some sort of a consolidation for now. I think still finding resistance around 760 to the 790 area, which was a prior support. But price is just trading sideways with possible higher lows along the way. So maybe it follows the trend that this trend line wise, I think could get support around close to 710, while resistance is still around 760, 770 for now. So I'm expecting some sort of consolidation still for the time being. And the next one is on Teva Pharmaceuticals. So for Teva, I think the uptrend is still holding up well. Following a period of consolidation over here, 1330 to about 1370s, saw the price broke out higher, and then did a positive retest over here around the 1370 previous resistance. So I think price is expected to actually continue this uptrend near term. Then yeah, let me try to find the next key resistance. Yeah, for this, I think if it can continue trade higher, I think the next key resistance would be probably around 1480 to 1560 area. Okay, next one is on UBS. Okay, for UBS, I think generally some pullback from the main uptrend channel resistance from the $32 mark, and then it did a retest of the prior resistance, now turns support at around the $30 mark. So just some range consolidation for the time being. I'll expect just some sideways movement with resistance around 31, close to 3160 over there. Yeah. Then the next one is on BYD. Okay, BYD, I think it's a very gradual uptrend, I would say. We're still seeing higher highs and higher lows as long as this trend line is still holding the price. For now, I think I will expect some bounce to take place, given that we had this trend line support around 195, as well as a previous resistance over here around the 200 level, which could act as support for now. So I expect some bounce, but I think it will be still very gradual with near-term resistance around 210, 209, 210 level over here. The next one is on Meituan. I think Meituan for now is also trading in this uptrend channel over here. Recently, price broke out above resistance at 97. Then to actually retest this uptrend channel resistance over here around the above 100. Then I think for now we might be seeing some sort of range consolidation for a time being to actually retest this 97 resistance. Then maybe just trade sideways for the time being. Okay, the next one is on AMD. Okay, AMD, I think some weakness definitely for now. After a period of range consolidation over here at the prior resistance, which was 179 to about 184 about there. We saw price broke to continue to form a lower low on Thursday, and then there's a bit of a rebound on Friday. So I think for now, likely to see this short-term downtrend actually continue with lower highs expected. I think for now, resistance likely to be 175 to 178 about there. It's likely price could come a bit lower to actually retest this horizontal support around 161, 162. Then it might do a bit of a range consolidation again. But overall, the price action once is still looking a bit weak for now. Okay, then next one is on ARM. I think ARM generally is quite sideways for now. Support at the 121 level is still holding over here. We still see lower highs being formed. When we take the highs for around 150, then we had a high at 145 now. Is finding resistance close to 128 about that. So some range bound for now. But I think if it can't hold the support 121, I think we're likely to see some lower lows to maybe 150, 116 from here, since the overall direction is still heading a bit lower, the lower highs. And next one is for Tesla. Okay, I think Tesla still some weakness for the time being. After finding resistance at 182, which over here price actually broke down of this wedge over here, and did a retest on Thursday and found some rejection. So with that, I think it's likely price currently it did a retest of the 160 lows. over here. If you can't hold this level, we're likely to see price come a bit lower towards around 152, 155 next. If it can bounce from here, then I think it's still likely to be weak with lower high below 177, and then just some sideways consolidation, maybe resistance around 171 or about it. And then next one is for Nvidia. Okay, Nvidia did Nvidia some weakness recently as well, pulling back, and then did a retest of this ascending falling wedge support over here, which is around 870. So currently it's still hanging around there. Price needs to rebound from Friday's candle upwards to actually just continue some sideways price action. If you can't hold on, I think we are likely to see further downside ahead. Yeah, for now, resistance likely to be this 900 level over here. I think we are likely to see continue a lower high. As for support wise, if it breaks down further, I think probably it will do a retest of 820 to 850, this zone over here. If you can't hold Friday's lows. Okay, next one is for TSM. TSM generally, I think still generally quite range bound still. Yeah, we continue resistance around 142, 145. Support we're seeing a bit of a higher low forming, but not too significant as well. So I would think for now, maybe just some range bound consolidation between probably 137 to 144 about there. Okay, then next one is on Bank of China. So I think Bank of China, the chart wise is overall is still looking quite good. After an uptrend over here, we're still seeing bullish continuation above $3.17. Price is, I think, just doing a bit of a consolidation still, but still seeing higher highs as well as higher lows forms. I think so that's still okay. If there's a breakout above 330, I think price could likely still continue its uptrend to the next resistance level. I think for now it's near the all-time highs. Yeah, so I think probably we'll see 320 to 3, maybe we'll see around 340 based on this 10 cents range over here. Okay, the next one is on Starbucks. Okay, for Starbucks, I think definitely still some weakness currently for now, trading in this downtrend channel. And then price broke below the support of $91, and then actually also below the $88 window as well. For now, I would think some rebound to take place given that we're at this downtrend channel support, but I think it will likely be very weak rebound. Continue to form a lower high along the way as we are seeing all this time. Yeah, so the key resistance for now is likely to be 88 to about $90 area. Then I think price will continue to turn down from there. Okay, the next one is on C3AI. Okay, C3AI has been pulling back just gradually over here. So I think it's quite likely that we might see this actually continuing to do a retest of the key support over here around 2370 about there, before the price could actually do some sort of a rebound. Yeah, I think probably for now we're gonna see this sorry, downtrend actually continue towards this key support level. Okay, hi, what should entry price be for CRM, Adobe, and CrowdStrike? Okay, for Salesforce, I think entry level for now is probably doing a range a bullish flag consolidation for now, given the previous upwards move over here. I think yeah, entry level will probably be around close to 294, 295 over here. If I'm aiming for lower support levels, I think next good entry probably around 280 over here. This for Salesforce. For Adobe, I think for now still showing weakness. So after the earnings release gap down over here, price we are seeing lower highs along the way, and then actually retested the lows on the day after the earnings release. It was around 485. So still I think quite weak. If you're interested in Adobe, I think entry level could consider around 470 over here, the previous range support. Yeah, that's one level. Then the next level could be close to 440s, which was a prior resistance, and then there's a gap over here as well. Okay, then the next one is on CrowdStrike. CrowdStrike, I think for now, probably just some range consolidation at the highs. Entry levels to consider probably be around first level are close to 290, and next level will be around 207, 273, 274, about there. Okay, the next one is on Apple. Yeah, for Apple, I think still some weakness over here. We're still seeing lower lows, but the support over here at 160 is still holding. So I think for now still quite bearish. If we see a breakdown of below 168, we're likely to see price likely to trend lower towards 165. Tap on 165 as the next support level. Okay, the next one's on Dell. I think Dell is looking quite bullish. So it did a recovery back towards the highs after the earnings release gap up over here. And then following some selling on Thursday, Friday we saw the bulls took back control. So I think if this can if you can sustain the lows from around the 120s over here, right? We're likely to see price continue to trend towards new all-time highs for Dell. Okay, then the next one is on IBM. Okay, IBM, I think for now it's just some range consolidation, but I'm more towards bearish for IBM. Firstly, it did a retest of the 195 previously, but then there was a false double top over here. And then price subsequently never recovered back above this $195 level. We are seeing a lower high being formed. Price did a retest of the key support 188 prior resistance level. So for now we're seeing lower highs into the support. I think as long if the 180 support gives way, I think we're likely to see price trend lower towards 181, 182 about that. So I'm still a bit more bearish towards IBM in the near term. Okay, then for Micron, I think is just trending upwards gradually, still seeing higher highs and higher lows being formed. I would think for now it's holding above the 10-day moving average as well. So there's still quite a strong trend. Yeah, if you continue to find support along the way, I think could still continue this trend to actually gradually trade higher to form the higher highs. Okay, next one is from Broadcom. Okay, for Broadcom, I think currently still nothing too much, just some range consolidation taking place. The key resistance is at 1004. On Thursday, it did a retest over here, and then there was a sell down. Friday, some slight rebound. I think still some range consolidation with support around 1285 to about 1315 about that. And resistance is about 1375 onwards to 1004 for now. Okay, then for Amazon, I think Amazon is looking good. So yeah, after a period of range consolidation over here, 180 resistance, he broke out of it last week. Then I think we're seeing price trend higher. So likely we will see Amazon retest the previous all-time high, which is close to 108. I think likely we will see this bullish momentum continue higher for the time being. And as for Alphabet, it did a retest of the high, the 155. Then some pullback afterwards, but continue to find support at the prior resistance at 152 over here, as well as from this trend line support. So I think in order for the price to actually continue higher, you need to see price continue to bounce from here. You cannot break down below these 152 lows. If not, we're likely to see probably some range consolidation take place. Yeah, if you can bounce out, I think we're likely to see some new all-time highs given this bullish trend over here. Okay, next one is on realty income. Okay, realty income, I would think for now, short term a bit, probably still stuck in the range consolidation price tried to break above the resistance at 53, then it did a false break over here. And then currently it's finding resistance from this level. So I would think probably the price needs to settle somewhere, continue in this range, near-term support around 50, probably possibly around 51.70 about there. So maybe just some range consolidation for the time being still. Next one is for medical properties trust. Remember, medical properties trust, I think, a retest of the resistance. Yeah, did a retest of resistance around 4.7 to 4.8. Then we see a pullback. I think likely we will see price retest the support level close to 3.94. Then it continue to bounce a bit from there. Continuing on this range consolidation we are seeing for the time being. The next one is ExxonMobil. For ExxonMobil, I think if I'm not wrong, it's at the new all-time highs for now. Yeah. So for now, still very strong bullish trend. Yeah, it's trending actually just holding above the 5-day moving average in blue. So that's still indicative of a very strong trend. I think we're likely to see price actually just continue to trade higher along this MA. Yeah, as long as no breakdowns below that. Okay, next one is JD. Okay, for JD, I think some consolidation for the time being. Price is just trading sideways, resistance close to 27.30. Support is around 25.30 about that. So I think just some sideways price action for the time being. Okay, next one is on AT&T. Okay, for AT&T, I think it's probably a very gradual uptrend over here. Yeah, still seeing higher highs and higher lows, but it's happening just gradually. I think still okay for now since we are still holding above this breakout of 1720, 1730 level. Yeah, it's still continue to form a higher high. So I think likely to continue this uptrend gradually. Next one is on Verizon Communications. Okay, Verizon did a retest of the resistance over here at 43.20. We're seeing some pullback. For the time being, I think we did a retest of 10-day MA. We might see a bit of a bounce, some consolidation for the time being, as it digests some selling from this retest of a prior high. Probably some consolidation for the time being. Okay, the next one is on iFast. Okay, for iFast, I think for now we're likely to see some range consolidation. Support is still holding around 665. I think resistance likely still hold around $7. So I think just some sideways trading for the time being. The next one is on SAM Industries. I think for now it's trading up in this uptrend, this short-term uptrend channel, holding above the 10-day moving average. So I think for now, short-term support around 542, 543. Resistance for this week probably come in around 560 around there. Okay, then next one is on Franken. For now, Franken, I think some weakness for the time being. Did a retest of this support. Then this occurred after a breakdown of this range support at 164. So we are seeing actually some weakness from Wednesday onwards. Maybe a retest of this lower support at 160. And actually we have lower highs forming along the way as well. So once this 160 is unable to hold, right, I think we're likely to see a further pullback for Franken towards like 150, 152 about it. Okay, then the next slide is on UMS. Okay, UMS, I think still some range consolidation taking place. I think nothing too much, still probably trading between 133 to 138 about it. Okay, then next one is on the three local banks. First up, I think for DBS, Some short-term price consolidation, I think is likely. Actually, when you look at the longer-term chart, it's actually currently at the resistance for now. This channel resistance. So I think probably just do some sideways price action with. You can see some resistance around 35.80 currently. I think probably do a retest of the near-term supports, which is around 35 to about 35.30 area. So probably just some sideways consolidation. Next one is on UOB. UOB, I think probably will do some sideways consolidation as well. Did a retest of the prior high over here, 29.70. And actually it continued, it just did a bit of a sideways afterwards. With support around the 29.20 level. So I think probably we just sideways between 29.30 to about 29.80 for the time being. And as for OCBC, also similar, did a retest the high 13.84. I think we're likely to see some sideways from 13.50 to 13.80. Okay, next up is on STI. Okay, for STI, I think still finding resistance from the around the 3245 level. So I think for now it just did a bit of a pullback. I will expect some range consolidation for the time being. Yeah. We support currently around close to 3,200, 3,190 to about 3,200 level. Okay, what's the TA on nanofilm? Okay, for nanofilm, I think I'm still bearish on it. Looking at the price action wise, recently has been doing a bit of a range consolidation, but we can see at when price broke above 74 cents over here, it was a false breakout, and then afterwards the price was unable to trade higher than that. And then after that, it actually retested keep on retesting the support at 70 cents over here, forming lower highs along the way. Currently today is testing the 69 cents swing low over here. So I think if this gives way, I think we would like to see price retest lower lows like 67 cents or even lower. Yeah, given the current negative price action you're seeing. Okay, next one is on China Southern. Okay, for China Southern, I think some a bit of weakness in the price action for now. Looks like a descending triangle. Lower highs form towards the support at 555 about there. So I think if it doesn't hold, then we will see lower lows of about 530, 540 next. Yeah, given the overall trend is still actually just still a bit of a downtrend with the lower pre-swing highs and swing lows on the way. The next one is the TA for Manulife REIT. Okay, Manulife REIT, I think probably likely to do some bit of a consolidation for a time being. So after a strong run over here, I see price sort of just put back a bit. Yeah, so I think we're just doing a bull flag of a consolidation for a time being, with support around 0.070. This channel support from as well as the previous horizontal level. Okay, next one is on Jabfa and ComfortDelGro. Okay, for Jabfa, I think nothing too much for now. Likely it's just possibly a bullish flag for now from this run over here. Price is finding resistance about 27 cents. Yeah, support is still around 25 and a half cents over there. So I think just still some consolidation for the time being. Then for ComfortDelGro, still trading in this uptrend channel over here. Price is approaching the resistance of about 149, 150. I think which is also a previous horizontal resistance back in 2021. So for the time being, I think you might see a bit of a selling come in near this resistance, then it might just consolidate sideways afterwards. Okay, then next one is on US Bancorp. US Bangkok, I think currently trading in this uptrend, short-term uptrend channel over here, did a retest of prior resistance again at around $43. So I think likely you're gonna see a bounce from here. Yeah, since currently it's at the channel support as well as the prior resistance level. The next one is on Western Alliance. Western Alliance, I think still some range consolidation for the time being. Resistance still strong around the 63 to 64 level. But some positive is the possible higher lows along the way. So yeah, with the higher low over here, we might see a higher low form over here as well. Maybe at 58 or 59 area. Next one is on Jackson Financial. Okay, for Jackson Financial, overall it's still trending upwards nicely. Recently there's looks like a failed attempt to break above $67. So I think if a price cannot reclaim above this breakout soon, I think it might come a bit lower to retest like 65 along this trend line as well. Yeah. Next one is on Ally Financial. Ally Financial, I think overall is trading in this rising wedge over here. Currently at this trend line support again, close to the prior range of resistance level. So I'm expecting some bounce to take place at this $38 level. Short-term resistance wise, we might see around 39 with the recent lower highs we are seeing over here. Yeah, so we might see another lower high take place as well. Okay, the next one is on Truist Financial Corporation. Okay, for this, I think it's still some range consolidation taking place. Did another retest of this prior resistance at 37.40. So I think likely to just sideways between this 37.40 to $39 level. Okay, then next one is Delphi. Okay, Delphi, I think short-term wise, after a range consolidation between 89 cents to about 92.5 cents, there was a break above it, and currently looks like doing a retest. Yeah. So I think likely we'll find some support and just bounce from here and maybe just do some sideways movement. Next one is on Food Empire. Okay, Food Empire managed to trade back above this 137 level. And then we tested 144, some pullback for now. So I would think probably some range consolidation with 137 as a support. Then resistance is above like 142 for now. Okay, next up is Yangtze Shipbuilding. Okay, for Yangtze, I think some weakness currently. Price was unable to close above 190 level over here. Then I think we might be seeing price come to retest this 183 lows again. Maybe just do some range consolidation. And yeah, today might see the first bearish crossover again as well. Okay, then for ISDN, I would think for now, overall looking at the bigger picture is still continuing on its downtrend. Recently, did a retest of these prior 32 cents levels as support, now turn resistance. So I think some slight pullback and consolidation is likely. Probably just trading in a range between 29.5 cents to 32 cents. Okay, next one is on Aztec. So Aztec, I think we're seeing some weakness currently with the price actually breaking this range support level 102. Then we did a retest of 99 cents previous high. So for now, I will expect a bit of a bounce, but with a lower high likely with the resistance at 101 or 102. Then price might turn lower from there. Even the current pullback wave, I think. Yeah, after the rise in here, a bit of range, then currently is in the down wave. Okay, I think I'll pass back my time to some of my colleagues. I'll take a look at the other key questions and look at the charts first. Yeah, thanks.
Thanks. Yeah, thanks, Zin. Okay, let me just try to answer some before we try any at one. The term business review after consolidation, what chances of a price performance? I think that the worry for Peggy is not around. Sorry, everyone's gone off for meetings. So the worry for Seatrium is really they still have to do some consolidation of the yards. That's the first thing. They are still going to gear up quite a bit, raising the risk of some capital raising exercise. Yeah, so that's why we are a bit more hesitant on Seatrium. In the end, it's just going to trade along with the crude oil price. The other thing is that okay, sorry, the Mermaid Maritime, how's the prospects of it going up? Okay, so for Mermaid Maritime, it's mainly reliant. We're gonna have webinar with them, so better to ask them directly. They are. I didn't meet them. Peggy met them. Sorry. So they are very reliant on all fields that the all majors want to close. And the order books are at record highs. So I think the outlook is still positive so long as the oil price is high, if I can recall what Peggy said. Because one of the reasons is that with high oil price, then the companies are willing to spend to try and mothball all these old production platforms and drilling rigs. Yeah. Yeah, so sorry, I'm just recollecting because I didn't really meet all these companies. All these were done by Peggy. Yeah. This one, CapitaLand, Escort, and Ascendus, I'll leave it to Darren. Between China Merchant Bank of China, which is a preferred buy, we don't cover China stocks or Hong Kong stocks. Apologies for that. That one you have to ask for the TA. Okay. Let me move on. What's my target price for Comfort? I think my target price for Comfort is 158. Yeah, I guess coming close to that. So for Comfort, it's still another. Sorry, 163. Apologies, that's the old target price. So my target price for Comfort is 163. Comfort, it will be another year of growth for Comfort. I think you will get the platform fee, higher commission charged to the taxi drivers. China also turning around because in China, even if you're a ride-hailing company, you need a taxi license, and they are the ones that have all the taxi license and the taxi fleet. And then the UK is doing well. They secured one contract recently, and it will get higher repricing because competition has come off after hemorrhaging for the last 2 years. So that's why 2024 will be another year of growth. 2025 a bit less visible, but at least 2024 is still be another year of growth. So our target price 163. Okay, I think the rest, Darren, do you have any on the capital? Then we just hand it to Zane.
Yeah, there's one question on for a long hold is CapitaLand Escort or Capital Industry a better buy? Which one has better growth? Are they largely local based? Yeah, so in the near term, I would say CapitaLand Escort Trust because the DPU growth potential, and a longer term is really hard to say. Both will benefit from the interest rates definitely, but based on the geographical diversification, CapitaLand Ascendant Street is more heavy in Singapore. They have about 60% of their assets in Singapore, while Escort only has about 16. One is 60, one is 16. So Escort is more heavy in the other countries like US, etc. Yeah, so yeah, we do not cover Ascenders, but we have a buy call on CapitaLand Escort Trust. Target price $1.04. Yeah, so that's our take. Think the last 5 minutes I'll hand it back to Zane for some TA, yeah, or for.
Oh, okay. Just on the odd lots, I think you can sell your odd lots through poems. So I just wanted to double confirm it. So on the poems, it's still under the DBS ticker, but there's one particular screen that you can sorry, that you can use. It's called under the ready market there, but then you can sell your odd lots through Poems directly. There's one more question on nanofilm. Because they are languishing despite acquisitions in Germany. So nanofilm, the major customer is Apple, and if you take out a handphone, they do the coating for those buttons that you see, mainly for aesthetic purpose. That's going to make it help you press better. It's going to be a challenging time for nanofilm. I think because because of course Apple volumes are coming down, and then number one, then number two, Apple asked them to go to India. Then they have to set up a new facility. That means you have to incur a lot of costs, and you have no choice. If you don't go, you lose them as a customer. They are also trying in Germany. So the Germany is really just a start, more like a startup. They're looking for opportunities in Germany. So you're talking about another 2 to 3 years. So the next 1 to 2 years look challenging for them unless they can their project, because they are also doing this bus bar or this battery coating of certain battery parts in China. But that is still on prototype stage. So unless that takes off, then I think nanofilm is going to find it very challenging for the next few years. Until they can get out of relying on Apple, which so far we don't see it. Zane, you want to end it, or you got any more?
Yeah,
There's
probably
one
I
more.
can do a few before
Yeah,
one.
Darren, there's one more on Singapore dollar if you want to answer.
Yeah, for you see continuing strengthen against the Sing dollar against the other currencies. How long might this go on for? How will the strong Sing dollar impact the REIT? So basically, it really depends on how much of the forward income these REITs want to hedge. So it really differs between all the REITs. Yeah, so if the impact will definitely be less if they hedge the REIT, the foreign source income. Yes, yeah. So this really depends. Yeah, on the hedging strategy for REITs. Yeah, okay. Thanks, Zena. Anything to you?
Okay, thanks, Darren. I'll do a quick one. CapitaLand Escort Trust. I think currently just some sideways movement at the resistance, which is around the 94 cents level. So I think if you can hold over there, to sustain the higher lows we've seen recently in this upwave over here, I think it's still generally more positive to test a higher resistance level at the 96 cents to just 98 cents mark. Yeah, then next one is on Far East Hospitality. Far East Hospitality, I think it's still some range bound movement for the time being. See price turning a bit down from the resistance at 63.5 cents to 64 cents level. I think maybe we're seeing a bit of a slight pullback or consolidation. The key support is still around 60 to 61 cents area. The next one is for Fraser's Hospitality Trust. I think some range consolidation for time being. At a prior support level, which is around the 45 cents level. And current resistance around 47 cents. So yeah, so I think likely we're gonna see continued sideways movement for the time being. Okay, then the next one is on CapitaLand Investment. I would think for now it's still trading in this wedge over here. Yeah, so I think for now nothing too much. Support is still around close to 268, 269. Resistance probably around 275 around there. Then the next one is on CapitaLand CICT. Okay, for CICT, I think generally it's still very range bound, as you can see from the chart. Yeah, so I will expect price to just still continue find resistance around the $2 mark from there. Yeah, then with the support currently around 195 level. Okay, the next one is on 546 Hong Kong Wu Feng Group Limited. Okay, for this, I think it's still it is trading in this uptrend channel over here. Recently, some pullback from the channel resistance around 520, as well as a double top over here. So I think for now it's finding support around around the 470s level. I will expect that to actually continue for a time being. 460 to 470 is the support zone for now. Yeah. So I think there are some sideways movement. Yeah, I think I'll go through two more. And next one is on First Pacific. First Pacific currently I think is still likely to continue its uptrend over here. Recently price broke above this 380 level. We're seeing short-term higher high around the $4. So I think also with higher lows along the way. So I think as long we can see higher lows continue from at this prior resistance of high 370s to 380, I think we are likely to see bullish continuation. And I think the last one, Yanco Australia 3668. For now, I think we're likely to see some bounce from this horizontal conference or horizontal as well as these trendline supports. So from this trendline support is around 2630, as well as we have this horizontal support around here. So some bounce, near-term resistance wise, I think it's around 2850 to about 2920, about there. Yeah, so I think if you have time, sorry, I'm able to go through all the questions. Can post in P3, then I can answer them afterwards. Yeah, thanks. I'll hand back to the time to Paul to close the session.
Yeah, thanks everyone. Yeah. So sorry, I can't answer some of them. Especially the online one. Let me kind of double check. Sorry, I should know this about. But you try to post it in our community, then I will definitely try to answer it. So if you guys go to P3, sign up, anyone can join. So then you just post the question, then everyone will have the whole community can look at the question and help you answer. Just I want to get it right before I try to answer it. Yeah. So apologies if some questions we couldn't answer you. So again, just go to community, we post and we'll try and get you an answer. Because some of the analysts also not around here today. I think 3 analysts not around, so can't give you a concrete answer. So apologize for some we didn't really give you a proper answer to that. Yeah. With that, I'd like to thank everyone again, always for your questions and always for taking the time to be with us. And hope you have a good week ahead and a good Hari Raya celebration. Thank you, everybody. Yeah.